Welcome, guys. My name is Galina. I'm the co-owner of Thousand Lashes. I'm very excited about today's episode. We're going to be talking about finances for lash artists. So, basically the business side of lashing and taxes. So tax season is slowly coming up, and I know a lot of you guys are anxious because it's kind of like when you don't really understand something, sometimes it's easier to just keep pushing it off and then deal with it later. But in this episode, I'm going to talk a little bit about some of our mistakes and some of the things that I wish I had known earlier, so that would have actually helped me save a lot of time, a lot of frustration, and a lot of money. So basically, taxes, especially if you're a business owner, it can be like a double-edged sword. It can be like amazing because it can help you save a lot of money, but it can also be really stressful if you don't plan it properly, because you can end up owing a lot of money in taxes. Now, again, everything I'm going to talk about is just my opinion as a business owner and someone that's been doing this for over like 7 years now. Obviously, for more specific tax advice, you should contact your CPA. But here are just some things that have helped me and hopefully can help you guys as well. So the most important thing that you need to kind of be aware of is that you need to plan financially, okay? So if you don't plan in advance for different things like, slow months or tax, when you have to actually pay taxes, you can end up actually in a lot of trouble. So did you know that 35% of small business owners in beauty fail to maximize their tax deductions? And this again falls into planning. So if you understand and you know what you're able to put away as a business owner and what like different loopholes exist for actually being able to put money away, you're gonna be in a much better situation. So my background is not financial at all. So I did not know any of these things before I started a business. I was a registered nurse, and as an employee, I never had to think about any of these things because it was already done for me, right? So as a W-2, I would get my stub, and like I would see a lot of taxes being taken out, and I would have my insurance and health insurance and whatever, and I would just never have to think about it. But as a business owner, the game is completely different because it's the way that you play the game. So for instance, like how much money you put away in different accounts, like there's different accounts like solo 401k account, where you're able to put away money as a business owner. You have to check each year. There's a different limit, but I believe this year, if I'm not mistaken, it was like close to 22,000. So you're able to put like money away into that account, and it basically lowers your tax bracket. So how much money you're going to be making at the end of the year. And so then what ends up happening is that you end up not owing as much tax, right? So all of these different things. Another one is an HSA account. An HSA is like a health savings account. So, since thankfully, knock on wood, both me and my husband and my kids, like we don't use, the doctor that often, just for like, checkups and stuff like that. We were paying a lot for insurance, health insurance. And so this year we decided we're going to do an HSA account, which is basically like the total is close to $8,000 that we're able to put away into this HSA account, which is again lowering our total income at the end of the year, so that by the end of the year, when we look at how much money we made, we're able to actually remove that $8,000, and it again lowers how much taxes we owe at the end of the year. So there's different things like that. Another thing is deductions. So you might not know exactly how many deductions you are able to do as a business owner. So for example, conferences. If you go on conferences, those are all deductions from your actual salary that you're going to take for yourself. Another thing is meals. So if you're having a meal that is for the purpose of your business, for example, you're meeting another lash artist in your area to, let's say, talk about how to improve your business or how to gain more clients, or you're meeting with a marketer locally, and or you're bringing let's say a Starbucks coffee to a hairdresser in order for her to refer clients to you. Well, you can write off 50% of the meals usually. And again, this is 2024, 2025. You'll have to check again with your CPA, but I believe the limits are about 55%, which is nice. And this way, like, if you're kind of informed exactly about what you're able to write off, it can kind of guide you in the decisions that you're going to be able to make for your business, to both grow your business and also, let's say, make certain decisions that will improve your business, right? Another thing I want to talk about that is so important and that I didn't know in the first couple of years. Again, when you're starting as a business owner, it's a completely different landscape. It's just totally different. So you need to have a dedicated business account with a business card that you're just using that account solely for the business. And I didn't know that in the first year when we just started the business. I would pay for a lot of things for the business with my personal card, right? But this makes it very, very difficult at the end of the year to try and figure out, like, you went to Staples, you bought something. Did you buy that for the business or did you buy that for the house? Like, which is it? Like, is it personal? Is it business? So now the way that we work is that I have a business account and I only use that for the purpose of the business. So anytime, let's say one of my employees, they need to go and get something at Staples or at FedEx, they have a card and they will use that card to actually go and buy something at FedEx with the business card. And then on the back of the receipt, I always tell them to write exactly what it was for, the time. If they went out for lunch with someone and it was related to the business, they write on the back of the receipt what it was about, what the lunch was about, what they spoke about, the time, the date, and who was present. That way it makes it so much easier, because then, like, at the end of the year, when it's time to do taxes, we know exactly, who did what and why and how that's related to the business. Now, everything needs to be properly documented. Everything you need to keep in like a separate folder, a separate file, and just make sure that everything is separate. And and ideally, you should have two separate accounts. So that will make things so much easier, both for your accountant and for yourself. When it comes to apps, what we use currently is QuickBooks. QuickBooks is fairly easy, like the way you have to like categorize all your expenses. So you have to like basically categorize supplies, you categorize like your rent, and it all goes in different categories. So that way at the end of the year, once again, everything you've spent is in different categories, and it's just easier to track everything. So you see what's coming in and what's coming out. Another tip I would give you guys is the 30% rule, okay, which is to save for taxes. Again, even if you have all these accounts, like I mentioned, that hopefully lower the amount of taxes that you owe to the government at the end of the year, you might still have some to pay at the end of the year. Like at some point, I remember we had, like, after a few years in business, we had like a pretty substantial amount that we had to pay for taxes, which I did not plan for, again, because in the past I was a W-2, so I didn't really understand the importance of saving for taxes. But now I always make sure that I'm saving at least 30%, like putting it away in a separate account and just not touching it and having it available for the end of the year. If there's, let's say, taxes that need to be paid, then I'm able to have that money and not have to stress about where to come up with the money to pay the taxes. Another thing you should plan for is like you want to plan for your business growth. So like if you want to upgrade equipment, if you want to, let's say, hire staff, you want to expand your space, you want to, let's say, add different services to your space, if you want to like hire another person, or you need some special equipment, then you need money for all of that, right? So it's always a good idea to have money saved up for these types of things that come up, right? Because then then you actually have money to continue scaling and continue growing. You can always do it like by obviously putting it on a business credit card or like on taking a loan, but that's usually a little bit more risky. My personal preference is to try to save for a lot of things, and I find that helps because then you're kind of like more sure that, okay, like at least if it doesn't work out, like it's not like you had to borrow the money and then you have to pay it back now. Another thing you need to keep in mind is you need to understand your tax obligations. So are you self-employed? Are you an LLC? Are you a sole proprietor? So what are the implications for tax purposes? So they will have different implications. And so again, this is something that you should always discuss with your CPA about. And then finally, this is my final point. This is, we're going to talk about tax deductions Lash Artists should not miss. Okay, so the most important one obviously is going to be your studio, your rent. If you work from home, there is a certain percentage that you're going to be able to write off of how much of the part of the house that you're using. Then your supplies, obviously, so products that you're using, all of that is 100% a tax deduction. Trainings that you've taken, courses, certifications, anything that advances your skills and your artistry is a tax write-off and a deduction. Conferences that you've taken, for example, if you've gone on any conferences last year, that is also a deduction. Travel, again, like let's say you have taken a plane somewhere, that is 100% a tax write-off. Your accommodations, and then 50% of your food as well. With food, it gets a little bit tricky, so you need to speak with a CPA, but basically it's 50% of it is deductible, and then 100% if it's groceries. So if you're away on a trip and you shop in a grocery store, from my understanding, it's 100% deductible, and if you go to the restaurant, it is 50% deductible, but it has to be more than $70. So if your meal costs less than $70, then you're responsible for 100% of it. So that's what my CPA explained to me. But again, you should always check with your CPA just to be on the safe side. And again, it's always good to have a CPA available that can help you out with like these types of questions. All your electronics, if you use electronics for work, that's also a deduction. So that's about it for today's episode. I hope you guys enjoyed it, and we will see you guys next time.